Hey guys, welcome back. In this video, we are talking about AMC soaring, the short swaps covering, the price increase, and many more in this video. Now, amidst everything that's ongoing with the dilution, one of the things that I wanted to bring back is, of course, Adam Aaron talking about blindly fear dilution, you miss crucial facts. In Jan 21, AMC issued shares, AMC share price soared. Now, we've seen this happen in the past before where AMC did a offering and of course the price soared along with it. And this isn't to say that this is something we are going to see every time, but it's to talk about the preparations and the thoughts that's done behind this. We also have to remember that Adam Aaron recently has bought shares of AMC. So he, for one, definitely doesn't want to make any moves that would put AMC in a bad position. He's obviously here for the longevity of AMC. And just like how we've seen in the past with how the money has been used, whether it's paying off debt, whether it's making more investments, or whether it's just the fact that every time we issued shares and the price soared, it's all to do with the benefits of AMC. And Adam Aaron is the one who benefits the most with the share price of AMC going up. So this is something that I've always strongly believed, which is he won't do anything that is there to harm the price of AMC. He won't be there to do anything that in the long run will put AMC in the bankruptcy realms of possibilities. And the reason why I really want to focus on long term is that there will be things that has been done, that could be done, which has an effect on the price of AMC in the short term. Evidently, we've seen it from here, but ultimately, in the long run, we will see it go up. And just like how we've seen Adam Aaron has bought in and the price has, of course, gone up from there. Like I said, I do believe that he would want the AMC price to be higher than any apes because he stands to gain the most from this. And ultimately, we have to understand that despite everything that has ongoing right now, there has been nothing changed on the macro outlook. We still have right now more fuel. We have better fundamentals right now. And so going into the future, it's only going to be even better for AMC. And so with that, AMC is still up over 100% over the past 3 months. And I think that's one of the biggest takeaway from this is that AMC is still at a higher price than 3 months ago. And what we have to realize that right now is that AMC dropped 25% from where it was, but the fundamentals, the position that AMC is right now in is better than when it was when we saw the price at 296. We are right now in a better position when you have everything that's considered that's going on. And this is why I'm not worried. You can see up 120% from March 27th. And so you're telling me that AMC is worth 35 times less than in 2021, where theaters weren't even open due to COVID. I have to keep buying. Fundamentals are much better. Seems extremely undervalued. And this really just reflects to what we have been talking about and what pretty much all apes realize is that AMC is still severely undervalued. Yes, there will be things done like dilution, but it doesn't take away from the fact that we've seen what AMC was worth during the time when it wasn't even open, during the time where the fundamentals are much worse. When people are talking about the debt issues that is ongoing for AMC right now, they fail to acknowledge the debt issues that AMC originally had. And when we compare AMC now to when AMC first had its debt issues, we are in a much better place right now. And so the fundamentals has only gotten better and better, whilst the price has actually only done the reverse. And so if we talk about undervalue, if we talk about extreme return, this is exactly what we are looking at. And a very clear logic is clearing debt by X amount should by any logic increase market cap by more than that amount. As it, besides reducing debt, it also reduces risk and increases flexibility. That is, by any logic, AMC share price should end up higher once the dust settles, in spite of an increased flow. And I strongly agree with this because this goes on to what we talked about with how nothing with the macro has changed. And when we talk about AMC paying off debt, we listed out very detailed in yesterday's video about how This puts AMC in a better position because this firstly has already improved the earnings. This has improved the fundamentals because we have debt paid off. But in the long run, this decreases the interest expense. And when we see all of this, when this is actually being accounted and digested by the market, when they realize how well this is going to put AMC in terms of going forward, then that's when we'll see that people will stop panicking about this dilution, and that's when we'll see the price start running back up again. And one of the biggest things, and I think this really talks about it right now, is how shorts have manipulated AMC to unreal levels to block effective capital raises to keep AMC under pressure. Management keeps chipping away at the debt. This 200 million raise lets AMC redeem all the 2027 debt notes. And this is what I think people need to pay attention to. People are worried about dilution, and I completely understand that. It does suck, and I'm not here to say that it doesn't. But what we also fail to realize is that AMC was able to raise 200 million at a lower share count than we raised 150 million. And that itself should be one of the biggest takeaway, which is how AMC has effectively done this. And the fact that when we talk about why shorts have been manipulating AMC is because they precisely understand just how powerful AMC can be. Because if AMC were to be at $4 per share, we then will be able to raise 200 million at an even lower share count. And of course, that logic goes, kind of extending whether it's $5, $10, $20. And so this is what I think people aren't talking about enough, is how we have the ability to execute this at such an efficient level. And it also goes on to talk about why the short sellers have been continuously trying to manipulate the price of AMC. And it's also interesting that recently we have seen how kind of the bad negatives about AMC has suddenly emerged again. When we were going up, from $1 all the way up to where we closed to almost $3, we saw pretty much silence from the haters, from the negative kind of narratives. And now all of a sudden, where AMC drops, of course, 20%, that's something that we're not acknowledging. But now everyone's coming out to talk about how AMC is going to bankruptcy again. Now, the thing to note here, and this is what I think really should be highlighted, is that you can see how these haters who talk about AMC going to bankruptcy aren't basing it off of the fundamentals. They're basing it off of the current market stock price. So just because AMC dropped 25%, bear in mind, this has nothing to do with AMC's debt, AMC's earnings, AMC's revenue. AMC going down 25% has no impact on whether or not AMC is making money. But yet these guys are suddenly jumping out right now, and it's coming out at a time where AMC has actually done the opposite of bankruptcy, where it's actually strengthened its balance sheet. And so when we see these articles, when we suddenly see these things again, they don't know what they're talking about. Because if they're talking about AMC going to bankruptcy because AMC dropped 25% whilst improving the finance, whilst paying off debt, then you should really understand that they have no idea what they're talking about. And so this is how we have to understand that they are just here to try and push a bad narrative on AMC, of course, with the ultimate goal of trying to push people to sell. And you can see when AMC becomes profitable and very successful, the only thing that will matter is how much you own of that success. And so if you see that's a realistic future for AMC, the only thing on your mind should be buying shares to increase your ownership. Now, once again, this isn't financial advice, and this isn't me telling you what to do. But when we talk about institutions, when we talk about all of these big capital, and one of the things we understand is that market makers, hedge funds, all of these institutions, they're out here to make money. And so if they're here, if the market makers who stand to lose money with the price of AMC going up and that they are manipulating AMC, you understand what's going on. If the institutions who are accumulating AMC shares, who stands to make money with the AMC price going up, and they're continuously buying AMC shares and not selling, it tells you what's happening with AMC. And every decision made, wherever it is the shorts, wherever it is the longs of AMC, with these big capital, with these big institutions, they are all showing why AMC is going to go up, why AMC has such a big potential. And I think that alone should tell you about what's going on within the market. And remember, AMC right now, it's very likely we're going to be seeing it go back up to $3 to $4 within a very, very quick amount of time. Because by adding 95 million shares, it does not change the overall catalyst. We are still seeing bank de-risking, we're still seeing them exiting the swaps, we're still seeing the illiquidity, we're still seeing how short sellers are kind of over leveraged and are running into margin requirement issues. All of these things still remain. And that is what we have to realize with where AMC is going to go. If we talk about the technicals of AMC, AMC is still doing well. Despite what we've done, despite the run up, despite the decline, AMC is still sitting at a very good price. The technical factors are still doing very well, whether it's holding above the 200-day, whether it's the 50-day keep rising, whether it's the ability to reclaim 240. All of these things are still ongoing for AMC. And that's what we have to understand with the power we have going forward. And again, despite that, what we are seeing is how another technical fundamental factors are just showing how AMC is doing. Whether it's the RSI that is now normal, whether it's the volume that's still ongoing, these are all very positive. And if we take a look at the price appreciation for AMC, we have significantly outpaced the index average. Now, this improves its relative ranking within the Russell 2000 and increases the proportional weight in the new index. As a result, Russell 2000 tracking funds will need to buy additional shares of AMC to reach the higher target weight. So what you're seeing right now is another reason for why institutions are buying and accumulating AMC. Once again, all of this wouldn't happen if AMC is truly a bad stock. If AMC is really a bad stock, it wouldn't shoot out all of these signals that are making and creating the incentives for these hedge funds to start buying into AMC. It just wouldn't make sense. The very fact that it's shooting out the signals is just a highlight of where we stand as a company. Now, what I think is should also mention is, of course, that originally we did, of course, vote for the authorized shares from 550 million to 1.1. As of June 18, 2026, there were 797 million shares issued and outstanding. And so what we have right now is where we are ongoing, where we have for the rest. Again, it isn't to say that there will be no more dilutions, but I definitely believe that at the moment that AMC would try and do a dilution at the best possible price ever without affecting that much dilution. Just like we've seen how AMC was able to raise 200 million at a lower share count than when it raised 150 million. I think that it's already a very good sign going forward. And again, we have the ability to execute that at a very efficient level. When we talk about the market manipulation, when you take a look at what's ongoing, the same thing still remains. And this itself is just talking about how they're trying to take advantage of this, how they're trying to manipulate AMC and what it means. Because what we have to understand is that 10,000 in the money call options equals 1 million shares upon exercise. And that doesn't even kind of scratch the surface of where AMC is going. And so when we talk about AMC today closing above $2, when we talk about the manipulation, when we talk about the pressure that we're still applying, this is what's standing right now. And you can see, now you know how bad letting those $2 calls go into the money is for them. And this is why we've said with how nothing has changed, whether it's technical wise, whether it's fundamental wise, nothing has changed. Box office still booming, revenue still going up. The only fundamental change for AMC is that we see an increase of 95 million shares, but we see a decrease in the debt. We see an increase in the money that is then able to be spent on other investments. And so the only thing that I would say is that the only thing that has changed is very minor things, but things that actually positively affect AMC. Now, another thing that I find interesting is the current Bitcoin. What we see is how Bitcoin plays a role in financing the AMC MOAS. The most recent stable period attracted capital, and now sell-off begins again. Now, what I think is important about this is because of what we've seen in the past before. When Bitcoin dropped over $34,000 in price, we saw AMC having its run. And now we're seeing the very same thing happen again. And just like how we talked about with how it's used as collateral, how it's used as a way of keeping AMC down, if we are seeing value disappearing, we can see the value then go and be reflected in AMC. And now we're seeing even more people buying from this particular ape who have bought 10,000 shares at 2.11. Once again, it just talks about the dedication of the apes. It talks about how strong the apes foundations are and why the short sellers will never beat us. And when we talk about what's ongoing for AMC, when we talk about some of the past manipulations, you can see where what we saw with when ape shares was reduced, when Wall Street contact told him that there was more fuckery in ape than he said she had seen in his entire career. And so it just doesn't kind of explain. And like I said, nothing scratches the surface of the manipulation that AMC goes through. And it's why I'm not worried about this dilution, why I'm not worried about these articles, because even if all 95 million shares were to be given towards short sellers, towards these market makers who need shares, it still doesn't even equate to maybe 1% of the synthetics that has been created. And that's why I'm not worried. And when we take a look at the cost to borrow, when we take a look at the availability shares, there is of course some fluctuations in that. And it goes on to talk about what is potentially happening behind the scenes. As for GME, when we talk about another undervalued stock, GME's market cap is 103% cash. So if we talk about undervaluation, if we talk about the potential, GME is also up there. And it goes on to talk about where GME also stands and why people want to buy GME shares as well. As always, that is F Financial Advice, and I'll catch you guys next time.